Welcome to the deep dive. We're here to cut through the noise, get straight to the insights.
That's the plan.
And today, wow, the market is buzzing. Bitcoin just smashed through a key level.
It certainly did.
So the big question, I think, on everyone's mind is, are we finally seeing a real trend reversal here?
It's the question, isn't it? And that's what we're digging into today.
We're looking beyond just the price, exploring this crossroads for crypto. Is it decoupling? Is it maturing into, a part of global finance?
Right. We've sifted through the latest reports, the analyses, influencer takes.
Everything.
To get the crucial insight.
Exactly. Understand the drivers, the tests ahead, the big debates shaping things right now. Cut through the hype.
Okay, let's dive right in then, because today was, it was electric.
Mm-hmm.
Bitcoin, after chopping around, just decisively broke $112,000.
Mm-hmm.
Fast move upwards.
Very rapid.
It was pretty exciting to watch, actually. But what exactly triggered that? What lit the fuse?
Well, the interesting thing is the immediate catalyst wasn't really crypto native.
Oh, macro then. Yeah, exactly. It was the U.S. JOLTS job openings report. Came in at 7.18 million.
7.18, and that was lower than expected.
Significantly lower. The forecast was 7.38 million, and last month was 7.44 million. So quite a miss.
Okay, so fewer job openings out there. And in that weird market logic, bad news for jobs can be good news for risk assets, right?
That's often the dynamic, yeah.
Can you break that down? Why does a cooling job market give crypto a boost?
Sure. So JOLTS is a key indicator of labor market health. Fewer openings suggest the economy is cooling off.
It's slowing down.
And a cooling economy generally means less inflation pressure.
Ah, okay. The inflation link.
Exactly. If inflation seems to be easing, it makes it less likely the Federal Reserve will keep interest rates really high.
Or maybe even cut them.
It increases the chances, yeah. Maybe even this month. And for crypto, lower interest rates or the prospect of them, that's typically short-term bullish.
Because it makes riskier assets like crypto look more appealing compared to, say, bonds.
Precisely. Easier money conditions tend to flow into assets like Bitcoin.
That really shows how tangled up traditional macro signals and crypto sentiment have become.
Absolutely. It's a clear link.
But okay, one data point, even a big one like JOLTS, doesn't suddenly mean we're back in a full bull market.
No, definitely not. Need confirmation.
And we know more jobs data is coming, right? So probably more volatility.
For sure. ADP, non-farm payrolls, they'll all be watched closely.
So what's the crucial now what for Bitcoin? What does it need to do to prove this isn't just a, flash in the pan?
Right. This is the key test now. We need to see Bitcoin close above 112K on the daily time frame.
Okay, a daily close above.
And crucially, hold that level through the rest of the week. Consolidate above it.
Hold it through the wind. So not just spike and fade.
Exactly. If it does that, it sends a really strong signal that momentum is shifting in favor of the bulls.
Suggests real buying interest, not just a reaction to the news.
Precisely. It indicates conviction is building.
Okay. And it wasn't just Bitcoin moving today, right? Ethereum showed some life too.
Yeah, ETH saw a nice bounce as well.
Which is interesting because ETH has been under some pressure lately, hasn't it?
It has, yeah. There was that Ethereum Foundation sale of 10,000 ETH.
Right, that caused some chatter.
And some exits from large staking validators. So, yeah, some headwinds for sure.
So how does ETH fit into this picture now? Is its recovery tied to Bitcoin?
Largely, yes. With Bitcoin showing strength and the macro picture looking a bit better, thanks to JOLTS.
The tide lifts all boats kind of thing.
To an extent, ETH could definitely join the party if momentum holds. Its performance often follows Bitcoin's lead when broader market sentiment turns positive.
So watching ETH is kind of a check on whether risk appetite is returning more broadly.
It's a good indicator, yeah. If ETH starts to really move alongside Bitcoin, it suggests confidence is spreading.
Okay, let's widen the lens then. Beyond BTC and ETH, the altcoin market, many people were actually calling for September to be Bitcoin first. BTC dominance rising, alts lagging.
That was definitely a narrative building up.
But today's action, well, it seemed like altcoins were perfectly happy to run too.
They certainly showed they're still ready to run. Absolutely.
So what's the thinking now? Is there still a split view on how alts will perform?
There definitely is. It's interesting because even with that Bitcoin focus, some specific alts are really standing out.
Like which ones?
Well, Solana's still leading the charge, just continuing its strong run.
Yeah, SOL has been impressive.
And we're seeing ETH, obviously, but also this newer one, HYPE, and even DOGE, showing some fresh strength today.
HYPE and DOGE. Okay, so a mix of newer tech and, meme coins.
Right. It suggests a broader risk appetite creeping back in, not just focused on the majors.
So what about those contrasting analyst views? You mentioned Benjamin Cowen.
Yeah, so Cowen, he's still arguing for BTC dominance in September.
Yeah.
His view is that Bitcoin leads the way, especially early in a potential recovery.
Makes sense. Safety first, kind of.
But then you have others like CoinTrader Nick, who sees a scenario where alts outperform BTC through the rest of the month.
So the classic Bitcoin season versus altcoin season debate.
Exactly. And the source we looked at, they're sort of leaning toward alts, keeping an edge during these short-term rallies.
Oh, interesting. So favoring alts for now.
For these quick pops, yeah.
Yeah.
But they also stress, look, it's early in September, and a lot can shift. It's still very fluid.
Right. These are short-term tactical calls, not long-term predictions.
Absolutely. Things can change fast.
It's a good reminder that even when the overall market feels bullish, where you allocate capital, that's a whole different decision. Bitcoin leadership versus broader alt participation.
Huge difference in potential risk and reward there.
Okay, let's zoom out a bit from just the daily price charts and market caps. What other big headlines are shaping the crypto world right now? Things that maybe point to that deeper integration or evolution we mentioned earlier.
Yeah, there's some really significant stuff happening beneath the surface. First off, overall crypto exchange volume. It surged in August to $1.86 trillion.
Wow, $1.86 trillion. That's massive volume.
Huge. Binance is still the leader there, but interestingly, decentralized exchanges, DX, also saw really strong growth.
So more people trading and maybe shifting how they trade towards DeFi.
Seems like it. Shows growing adoption of DX platforms.
Okay, what else?
Second, that Ethereum Foundation plans a 43M ETH sale. That's the 10,000 ETH we mentioned.
Right.
They plan to sell it on centralized exchanges to fund research and grants, which is fine, but it's sparking debate.
Debate about what?
About why they aren't using DeFi alternatives.
Yeah.
Decentralized lending or trading platforms.
Like practicing what they preach, using the tech they support.
Kinda, yeah. Some in the community feel a large sale like this should happen on DeFi rails if possible to support the ecosystem.
Interesting point. What's next?
Then there's the Linea airdrop. Linea is a layer 2 scaling solution backed by consensus.
Okay, airdrop free tokens.
Essentially, yeah. They've got an eligibility checker live now ahead of the actual token drop on September 10th. Nearly 750,000 wallets are set to get tokens.
750,000 wallets. That's a huge distribution. Shows the scale of these layer 2 networks now.
Massive. 9.36 billion tokens in total. It's a big deal for a major L2.
And the last headline?
This was really fascinating. Galaxy Digital partnered with a company called Superstate.
Galaxy Digital, Mike Novogratz's firm.
That's the one. They've tokenized Galaxy's NASDAQ-listed shares on Solana.
Tokenized shares, like a representation of the stock?
No, this is the key part. It's the first direct on-chain issuance of SEC-registered equities.
Direct issuance, meaning?
Meaning the actual legal ownership record of these SEC-registered shares is the token on the Solana blockchain. They're digitally native from the start.
Whoa, okay, that's different. That's not just wrapping an existing asset, that's using the blockchain as the primary ledger for SEC-registered stock.
Exactly. It's a potential blueprint for how traditional finance could fundamentally merge with blockchain infrastructure.
That's genuinely groundbreaking. So we're seeing huge trading volume, big L2 airdrops showing user growth, debates about DeFi use, and now actual SEC-registered shares living natively on-chain.
It paints a picture of an ecosystem that's not just speculating, but actively building and integrating with traditional systems in new ways.
It feels less like crypto versus TradFi and more like a convergence, maybe?
Could be, or at least the walls are getting blurrier.
Okay, these headlines definitely show relentless innovation, but to really understand the implications, let's tap into some deeper analysis from some key influencers, get different perspectives on market structure and future roles.
That was good. Where should we start? Bitcoin cycles.
Yeah, let's start with Bitcoin. Benjamin Cowen often has interesting takes on the cycles. What's his latest?
Right. So Cowen recently focused on Bitcoin sitting right at its bull market support band.
The support band.
Yeah.
That's like a key price zone based on moving averages.
Exactly. Historically, it's been a really critical level. Think back to past cycles, 2017, 2020, 2021. Holding this band was crucial for the uptrend to continue. It's a real make or break zone.
So we're right there now. Testing it.
We are, and Cowen points out this historical pattern. Often a high in August, then a low sometime in September.
September blues.
Yeah, followed by a Q4 rally. He notes it's happened in 2013, 2017, 2021.
Interesting pattern. So what's his bottom line based on that?
His take is, if Bitcoin holds this support band through September, it sets things up really well for a potential Q4 rally.
But if it breaks down,
If it falls below support, he doesn't think it ends the cycle necessarily, but it likely delays things, requires more consolidation, more recovery time.
and his view on Bitcoin versus alts right now.
He sees Bitcoin as the safer play at the moment, because if Bitcoin dips from here, alts usually fall harder,
Right.
higher beta.
But if Bitcoin rallies, it tends to lead the charge initially. So his focus is on Bitcoin holding that core support level through this month. So Cowan's watching that September support like a hawk. If it holds, maybe fireworks in Q4. If not, patience required.
That's a good summary of his view, yeah.
Okay, so while Bitcoin is fighting at this key technical level, dealing with macro stuff, Ethereum's facing maybe a more philosophical battle, right? You mentioned that bankless debate.
Yeah. Is Ethereum ready for real-world assets? That's a huge question. Goes way beyond price.
Real-world assets, RWAs. So tokenizing things like bonds, real estate, equities.
Exactly. Stable coins are the biggest example now, but the potential is trillions of dollars in other assets.
And the debate was.
It featured two professors, Austin Campbell and Omin Malikan, with pretty different views on whether Ethereum, as it exists today, is the right platform for these RWAs.
Okay, what was Campbell's argument?
Campbell argued that Ethereum isn't ideally suited because blockchains, especially immutable ones, can't easily align with what he called messy real-world laws.
Messy real-world laws, like court orders, regulations.
Precisely. His example was, imagine a major stablecoin contract, like Tether's, gets hacked. Governments will intervene, regardless of blockchain immutability. They'll order freezes or reversals.
They won't care about code as law.
Right. So Campbell thinks RWAs need systems, maybe blockchains, that can respond to legal realities, things like admin keys, rollback functions, even if that means less decentralization.
Okay, so pragmatism over purity, maybe. What was the counter argument?
Omid Malikan took the opposite view. He argued Ethereum's neutrality is exactly what makes it valuable.
Neutrality meaning it just executes code, no judgment, no takebacks.
Exactly. He believes trying to add controls or backdoor permissions just recreates the problems of traditional finance. You lose the core innovation.
So don't compromise the principles.
His point is that RWAs will ultimately thrive best on chains that guarantee neutrality and predictability, even if that means sometimes things go wrong and can't be undone easily. That guarantee is the value proposition.
Wow. That really highlights a core tension, doesn't it?
Huge tension.
Like for crypto native stuff, ETH, Bitcoin, that immutability, that decentralization, it's a feature. It's the whole point.
Right.
But when you try to map, say, a house title onto that system, suddenly that same immutability might feel like a bug if there's a legal dispute the blockchain can't recognize.
Exactly. If a court says, transfer the house title, but the private keys are lost or contested, what wins? The court order or the blockchain state? That's the clash. Cryptographic truth versus legal reality.
So decentralization, feature or bug, depends what asset you're talking about.
That seems to be the crux of it. But interestingly, both professors agreed on one thing.
What's that?
That trillions in RWAs will move on-chain eventually. It's going to happen.
The direction is clear, just not the exact path.
Right. The big open question being tested right now with all these RWA projects is which model wins out for these assets?
Mm-hmm.
The neutral, immutable model or the legally responsive, perhaps more centralized one?
And how you answer that really shapes where you see opportunity and risk in the whole RWA space.
Absolutely. It's a fundamental question for the future.
What a journey today. From that JOLTS report kicking off a Bitcoin surge past 112K.
The immediate catalyst.
To the crucial tests Bitcoin needs to pass now to confirm that strength.
Holding that 112K level.
The altcoin debate, the major headlines showing deeper integration.
Like the Galaxy tokenized shares.
And finally, these deep philosophical debates about Ethereum's core nature and its fitness for real-world assets. It's just incredibly dynamic.
It really is. Constant evolution, critical decisions being made. It's not just numbers on a screen. It's the future of finance being built, debated, and tested in real time.
So much happening.
And we've seen today how just one piece of macro data can shift billions instantly. We've seen fundamental questions, decentralization versus legal reality, being actively worked out.
Yeah.
So maybe the final thought for you listening is, what stands out most to you as the critical factor here? Is it the macro tide, the economic data bringing money in or out?
Or is it the institutional adoption, building those bridges like Galaxy did?
Or maybe it's those foundational principles of blockchain neutrality, immutability. Will they bend or will they hold firm as trillions try to move on chain? The action definitely isn't slowing down.
So what questions will you be asking next?
Keep digging.
Absolutely. Thank you for joining us on this deep dive. Keep exploring, keep learning, and as always, stay curious.